Welcome to another episode of the Scouting for Growth podcast, one of our second episode for 2025. I am delighted to bring you an exciting conversation with Denise Garth, a globally recognized InsurTech thought leader and Chief Strategy Officer at Majesco. Denise has been at the forefront of the insurance industry transformation, helping businesses embrace innovation, digital transformation, digital technologies, and people-centric strategies to thrive in a rapidly changing landscape. Named one of 2024's 30 most powerful women in business by the International Business Times and consistently featured among the top InsurTech influencers, Denise has a proven track record of turning disruptive trends into real growth opportunities. In our talk today, we dive into the top trends shaping insurance and InsurTech as we head towards 2025, from next-gen technology enablers to constantly evolving customer expectations. Denise will share her insights on where the industry is headed, how to stay ahead, and why a collaborative mindset is crucial. Whether you are part of a large incumbent seeking to innovate or a startup looking to break into the market, prepare for a conversation packed with actionable tips and strategic foresight for one of the industry's leading voices. So let's jump right in and explore what the future of insurance holds. Hi, Denise. So good to see you.
You too. It's been just a couple months, I guess, since ITC.
And indeed, right? Couple of months. So happy New Year. I hope you had a wonderful Christmas.
Yes, we did it. We're just getting ready for the polar vortex now.
Yes, indeed, right? So New Year starting, and I'm excited to talk about trends with you to set the test or get our industry to actually think about planning and being ready for the new year. So let's get started.
Sounds great.
So when you look at last year, Dennis, what were for you some of the major themes that actually affected our industry? And what actually did you learn from what happened in 2024 that we can bring into 2025?
So I think that, I tend to do these trends every year, and I had 10 trends last year. That kind of highlighted what I thought was going to, kind of be areas of really key focus on last year. Those were, things like, legacy systems were going to come home to roost. It was around different types of products, the distribution channels. It was around robust growth in MGAs and surplus lines. It was around product innovation. It was around pricing, rating, and underwriting because of the challenges, particularly in the P&C market, that we saw with regard to rates going up and the losses that required rates to change. It was around data and analytics, and it was around risk resilience. And I think that what was happening in the market, both from an economic standpoint and also from a risk standpoint, has had a huge impact operationally on insurance companies. And as a result, I think what's happening now is that as we kind of go into 2025, the reaction of loss ratios increasing, the reaction of unprofitability, the reaction of high interest rates, all the economic factors, it now is really forcing us, I think, to kind of step back and say, it's a wake-up call. And we are in the midst of a business model and technology-driven change because I think we're finally realizing our decades-old operational models and technology foundations no longer meet the challenges and opportunities of this fast-changing risk and fast-changing technology and fast-changing customer demographics world. And it's really a race to the future where insurance is really more relevant than ever and it needs to be relevant. But we're now seeing, because of the challenges we've had the last couple of years, a growing protection gap that we have to address in a different way.
100%. And as you are highlighted, we are seeing a lot of shifts within our industry. So, as new market entrants, as challengers, right, are entering the market and challenging the incumbents within our industry, what core strategy do you see fueling growth in 2025, and what emerging challenges? And I know you already highlighted a few around risk mitigation, risk resilience,
Yep.
which is going to be a major topic, I think, in 2025. So what are those strategies you think young players and incumbents need to start thinking about?
I think those strategies are really focused in around this really changing world of kind of three factors. One is the changing world of risk, and there are still going to be some of the same products that we've always had, but we've got to think about how do we underwrite them differently, and how do we assess the risk differently. More importantly, how do we maybe minimize the risk? So it's not going to be just about underwriting to the risk. It's going to be helping customers really kind of minimize or eliminate as much risk as possible, because we can't keep growing the risk and growing the insurance costs. People can't afford it any longer. I think the second thing that ties into that is the technology. We've been on a technology ride for probably the last 10, 15 years, especially with the emergence of InsurTech. But I got to tell you, Sabine, the last 18 months has just been mind-blowing about the pace of change and what the technology is now really able to do. Not just AI that's been around for decades, but now Gen AI, and how we're able to use IoT, and how we're able to really finally use some of these technologies that can fundamentally help us do risk assessments better. They can help us give better customer experiences. They can help us really optimize the operation. And then finally, I think it's around data. And I think data, we've always said, and I've always said from my Accord days, that data is the lifeblood of this industry. But I think we're now really coming to a realization that we've got to be able to really, I talk about it as democratization and demonetization of data, because everybody's got to have that data. And what's kind of frightening is that many people don't know what data they have, and the data they do have is not of a quality nature. And that's going to really inhibit them to be able to do the first two items that I talk about.
So, a very interesting point you just made, because when I think about, data is the all of everything. We've said that for so long, but I think with AI, generative AI, it's just become even more crucial. The second point you have made is it's beyond AI and generative AI. We are talking about frontier technology, which include AI, generative AI, but also IoT, cloud computing. And then as we move forward with the new technology, which we are not using as much yet in insurance, such as Web3 or VR, AR, all this stuff at some point will actually play a part in the way we engage with our customers. But all those come together, right? And come together as frontier technology, which actually solve bigger problems. And you can't just think about AI without thinking about your cloud strategy, because you need cloud to do good AI, and you need good data to actually provide good answer and customer experiences, which are pretty seamless, right? Actually, Denise.
I couldn't agree more. And I think what it goes back to is that we've got to fundamentally kind of rethink our architecture of our solutions and the architecture that we're using. We can't just say, oh, we're going to go from on-premise up to the cloud, because to really optimize and maximize what you're able to do in the cloud, you've got to rethink the architecture of the solutions that you've got. And to be able to really leverage all of those technologies, it can't be just constant add-on of a type of technology. You got to really fundamentally relook at it. There was an article I posted out on LinkedIn. I think you saw it, where there was a major insurer here in the U.S. that was going back to on-prem because the cost of moving to the cloud was astronomically, supposedly higher. Well, it was fun watching all the responses from everybody because fundamentally, you can't just say, oh, I'm just going to lift and shift into the cloud. That's not what you need to do. You need to fundamentally rethink both the technology architecture and the business architecture because to really optimize and to take advantage of not just cloud computing, but all the other technologies that are going to leverage cloud, you've got to really rethink that and step back. We're no longer in the 70s and 80s, when we had the big mainframes and the on-prem stuff. We're now in a world of cloud computing that is actually expanding what the capabilities are going to be. And to really take advantage of that, you've got to really rethink both technical and business architectures and how that's going to do. And the partners that you work with have to also do that because their solutions have to be able to adapt to this pace of change and really adapt to leverage true cloud computing as it's really meant to be.
So I want to go back to some of the macro trends you actually highlighted, which is about socio-economic and environmental trends. Socioeconomic said, the demographic is changing. We have our Gen Zs, we have Gen A. And yesterday, you won't believe I heard about after Gen Alpha, we are Gen Beta, right? B coming into the market. So it's fascinating to see those new group of people who are going to be digital first coming to market. At the same time, you talked about risk resilience, which is about, for me, the environmental trend, climate change, climate resilience, that everyone, I think, not just, fossil fuel companies or equipment companies need to address, but our industry needs to actually understand those risks so that they can protect their customers better. So how will those have the biggest impact on insurers and how they strategize and innovate in the next few years?
So I think that what we really need to do, and I think this is really why there's been such an investment and a growth in particular the MGA market and in some of the startups that we've seen that could be an MGA, could be a full stack insurer. They're trying to kind of rethink how is insurance going to be done, but also what really constitutes the insurance policy. And it really is around the customer. And so I think there's a few different things. I think that front and center is really looking at insurance in a different light for this new demographic of individuals, particularly the younger generation. But I got to tell you, our research, our consumer and SMB research highlights that the older generations are accelerating in expectations of digital engagement, even at a fast pace as well. So we can't really kind of go beyond that. So I think that when you look at particularly this younger set of generations, they don't stay at the same place of work. They jump around jobs all the time. Number two, they might be jumping into a job and jumping out of a job and doing some gig work or doing some, advisory work type of stuff. They kind of alter what it is that they're doing. I think number three, you kind of look at the demographics and everything they do is digital. They pay everything digital. They buy everything digital. They do they kind of engage digitally in different ways. And I think that for insurance, it isn't just about saying, oh, let's put up a portal. Oh, let's do this. They got to think about the entire experience. And when I think about the entire experience, I think about how they first kind of engage them and how do they sell to them and how do they educate them and how do they do a lot of different things other than just buy and pay for the bill and wait for the claim to kind of come in. So when I look at that, I look at some of the statistics, that we found in our recent end of year consumer research. Think about 48% of part-time workers don't have access to insurance, for life, for health, those types of things. So they're out there looking for those things. They're looking at wanting to have a simple way of buying insurance, for both auto and renters or whatever it may be. So we need other options. But the idea is that they also are looking at it that they want the risk about themselves. They begin to understand that some of the risk is kind of pooled, so to speak. And they want to be able to manage the cost by having it protection as a service. So it's based on usage, whether it's P&C or it's life or it's, gig-based type of insurance, they want it usage-based. And this is where the technology really comes into play. And it comes into play at being able to really assess based on usage. It comes into play to really understand what is the risk and are they willing to actually minimize and reduce their risk? Are they taking, actions, better health, better wellness, better protection on their property, whatever it is? Are they doing some things to reduce that risk? People are willing to do that if they're able to actually have a better coverage at a lesser price. And so I think we're now in an era where top of mind issue of finances, because of inflation, because of the economic conditions, all of that, people are looking to decrease their overall cost of insurance by either the deductibles or lowering the coverages or switching where they're getting that insurance. There was an article over the holidays, Sabine, that said that today, between taxes and insurance, that those two combined is more than the mortgage payment on most homes. That's a sad statement. And that is not a positive thing. So people aren't able to afford homes. People are unable to afford vehicles because the insurance on the vehicles is also expensive. So we've got to find a way to make it affordable and make it accessible. And that's where rethinking all of this really comes into play.
Yeah, affordability. So, Denise, for people listening to us today, you are in the US and I live in Europe. And the interesting thing is we are suffering from the same problem. High
Exactly.
inflation, high interest rate, resulting into, now we're paying as well COVID-19, high taxes, and affordability is it's actually unacceptable that we can't actually afford insurance. At the same time, what you find is the younger generation do not believe they can buy their first home before they are 40 or 50. So they are disillusioned. So they are hopping job. And as you said, they are doing a lot of gigs. They have this belief in becoming YouTubers to actually make side hustles, right? Money.
Yep.
And so the work-life balance is very different. The other thing is we are suffering from a major talent gap as well in our industry. And so I'm not sure how we are going to fulfill that whilst the worker of tomorrow is looking for working different jobs. But for most companies, you have to work one single job. They need to be able to buy their home, buy their car, but they can't afford it. So they need those gigs. And so it's fascinating to see how the world is changing. However, our industry may not be adapting, right? At the
Yes.
same time, we need to find a way to create more affordable products, partly with climate risk.
Yes. Exactly. And I think that's where, climate risk, whether it's, it comes in a lot of different factors. It can be, I live in the Midwest. We're just having a lot more convective storms, a lot more hail, a lot more intense storms. I mean, last spring, here in Omaha, Nebraska, is where I live, we had one of the worst tornado outbreaks in the spring with a massive tornado that went through and took out 350 homes. We hadn't seen anything like that in decades here. So it can really have an impact. And now, winter's coming, I'm sure we're going to get the snow and the ice. And, about 5, 6 years ago, there was a bad ice storm in my dad's shed that stored all the machinery. It collapsed, the roof collapsed because the ice just kept forming on top of it and collapsed it. So it comes in a lot of different factors, from a climate shift standpoint. And that's where climate tech, I think, is going to really kind of take hold this next year as well. But, one of the things I think is that we've always had some elements of climate tech. We just didn't necessarily use it in that way. And so I think about it in terms of the models, the predictive models that, we've had out there that can kind of do some of the analysis of it. We now have new data. So we need to have some new models that are going to help kind of transition that out and look at it from a future perspective. But I look at a simple one like loss control technology. That's been around for decades, but we've typically only used it in high risk properties or in high value properties because we wanted to make sure that we didn't have a big risk, that we'd have to pay out a claim. The technology's there today to be able to do it with self surveys, with video. and you can have, people do it. So you could actually look at your whole portfolio by using a combination of people on the ground going out and doing an assessment of the more complex properties or more value. But you can do it with other digital tools that can come in, and AI can be used to be able to kind of assess that risk. And then out of it comes the list of all the risks. Why not create an opportunity to say, and these are the things that you can do to actually minimize that risk. So we've had that technology. We just haven't used it in a way to say, how can we actually minimize it and help our customers to actually do something to prepare as we kind of look at the impact of climate coming on.
Helping the customer, I think, is a key word you are actually highlighting here, Denise, and which takes me to business models, right? To be able to provide better product and services and affordable product and services, we have to change the business model of insurance. So where do you see the opportunity being? I think more usage-based. I read that we are going to move more on demand. Embedded insurance is going crazy. Some of the numbers are in the trillions, value created by embedded insurance. So in your opinion, what are the value and where is the opportunity and competitive advantage to be achieved by incumbents when you look at business model opportunity?
So I think from a business model opportunity standpoint, I think there's two aspects of it. There's the operational side of the business model, Sabine, and then there's the products that you're providing that will have an influence on the operational model. We're still going to have some of the same traditional products that we've had. Those are going to remain there, but we've got to rethink how do we actually process insurance. So, when you kind of step back and you look at it, I remember back in the early in my career, I had the opportunity to do process reassessment of every part of the business. I was inside of an insurance company. I went into every division of the insurance company. It was a massive learning experience. And we looked at the business processes to say, could we redesign them? Could you kind of do something differently and then apply the technology? What we've done over the last probably 20 years, or more, is we have kept getting new technology. We moved from on-prem, we moved into, componentized solutions, claims versus billing versus policy, and digital solutions. And now we're moving into the cloud. And what we haven't done necessarily is we haven't stepped back and rethought, how do we want to change how we do business? So today's technology offers you the opportunity to really redesign your business processes, redesign your business operating models to do something differently. I mean, just consider Gen AI. If you're going to leverage Gen AI in the business process, you want to be able to redefine how you're going to do that business then to really optimize that. If all you're doing is ripping and replacing, you're not able to do that. And you're never going to really kind of do that. It's kind of, how do you bend that cost curve? The only way you bend the cost curve from an operational standpoint is really rethinking that. So as you're doing that, you can also then rethink then, how do I bring these new products to market? Because you're not inhibited by the old processes that you have in place for the old types of products. And so you can look at parametric insurance, which I think is a fantastic area of focus that really offers people some insurance coverage when they're unable to afford it because it's so cost prohibitive, like for hurricanes or if you're doing it for earthquakes. It's also where I think specialty insurance is emerging. That it's really getting into, the risks are so different and so unique that you're going to kind of go in and you're going to kind of an insurance of some cases that you've got to be able to do that. You can't be inhibited by, oh, but this is the way we've always done our business processes type of thing. And then obviously when you get into embedded insurance and usage-based insurance, that kind of blows it all up as well. Because embedded, you're partnering with somebody to offer the insurance, embedded into the purchase of something else. And you've got to rethink how you're going to actually have a customer journey, how you're going to have a business process. So having simplified the business operations and not be inhibited by, this is a way we always did business before, has to be a first step. So my thing, is really around, do do everything as simplified as possible, not as much customization, because you need to be able to shift and adapt as quickly as possible. And the more customization you do, the less likely you're going to be able to really adapt and bring on some of these new products that are really needed in the market to address the challenges in the market from a risk standpoint and what customers are really expecting and demanding, Sabine. It's really, I think it's an awakening for the insurance industry that we really have to step back and rethink that. And I think if there's one lesson you could have learned from InsurTechs and all the startups, they were rethinking how do we do business. But we are inhibited from a legacy standpoint because we have legacy thinking inside the insurance companies on how business should be done.
100%. It's all about people. When you think about legacy, it's about siloed organization and siloed environment, very much fragmented. People still wanting to keep their turf when actually the market is changing, where we have to become more collaborative internally as well as externally. Now, you had Majesco, Denise, and one things which come to mind is that we are talking about legacy. We are talking about an industry which has grown through M&A. So a lot of acquisition, a lot of old system. I hear some companies have 250, 300 legacy systems. So how do you actually rationalize all those things when you start looking at technology and data transformation? We are already talking about frontier technology. So how do we start restructuring and simplifying when we have all this legacy stuff? Probably preventing us to move forward or restructure we actually serve the customer. And you said at the end of the day, it's all about serving the customer.
Exactly. And I think that's where I think there are a number of insurance companies that really took a really smart approach in that there are legacy systems, say, for example, billing. There's not a lot of other than being able to do digital billing and digital payments type of thing. Billing isn't really going to be your defining moment as to what really differentiates you in the market, So you can look at billing, and if you're a large insurer, with lots of different lines of business and lots of different entities, you could do an enterprise kind of billing approach, but simplify that. Where I see the real difference is that companies that are really kind of stepping back and saying, we got to rethink this. They're actually doing it by standing up a new policy system to actually say, we're going to redefine the business model and how we're going to process business and the insurance products that we're going to put on there. We've had a number of insurance companies, both existing and startups, that have taken that approach. And it is an approach because you're not inhibited by that legacy because you're standing up clean. You're able to kind of stand up the new business model, the new processes, put the products on there. And every time you bring out a new product, it's easier to bring out a new product. What you have to really have to make sure you're doing, however, is the people that are on the project, they can't bring their legacy mind and their legacy thinking forward. So they got to be open to those new ideas and a different way of doing that. So when you think about it for an insurance industry, what we really compete on, Sabine, are our products. It's how we underwrite. And quite frankly, it's about the customer experience and probably also the distribution channels. Those are the four that we really compete on. Everything else, it's pretty much the same for every insurance company. So why do we think that, oh, but this process is our secret sauce? No, it's really not.
Yes, we hear that a lot, right? Everything actually within insurance company is secret sauce. And then you have actually to be kind, but also be mindful that you need to bring, those organization and the people within this organization into a journey where at the end of the day, we need to start shifting our mindset and always looking at the customer. Earlier, you actually mentioned data as a differentiator, though. An organization have more data than they've ever had. But when we start looking at the risk you highlighted, right, the emerging risk coming to market, is that data sufficient? Question mark. So my question to you, Denise, is how can insurers leverage data analytics, AI, generative AI, to create new customer value proposition and drive that competitive advantage?
Well, I firmly believe that first and foremost is that organizations need to really truly have have a data strategy. Most organizations don't have a strategy. And this isn't oh, let's create a strategy. It takes us 12 months to create a strategy. It's not that difficult, to say what is really going to be our strategy? How are we going to, what data is really important to us? How are we going to pull that data together? What do we expect of the solution partners that we work with, that we have access to that data? They're just really simple things that need to happen. So, when I think about core systems, gosh, I think about when I was inside of an insurance company and managing all the systems on the individual lines. We didn't have access to all of our data. And we went through this process of pulling all the data together, and at the time into an enterprise warehouse. We thought we were growing. We had customers. We were growing. We really started looking at the data. We were losing customers. We were growing from a revenue standpoint, but we were losing customers because we never really looked at it in terms of the customer. We only looked at it in terms of a policy and the premiums on the policy. So being able to pull that data together into today, a lake house, and being able to apply the different analytics. I think you've got to have different expectations on the partners that you work with, whether it's your core system or it's your auxiliary systems, but also the systems that you're going to be setting up to be able to create your lake houses and be able to do the stuff that you want to do. I think the other aspect is that you've got to be able to say, what partners are you going to work with from a third party data perspective? I was sitting with a COO of a very large insurer here in the US, and he commented that their number one expense from a technology standpoint is actually third party data. That's a pretty sad statement, that we're paying that much money for third party data. We don't really know how we're using it. And would we be able to maybe optimize the use of that data, both financially as well as operationally, if we understood what data we already had and had access to? And I think one of the things, one of our joint friends, Lisa Wardlaw, and I had this conversation when she was at a conference. We sat and we were having a break, is there some technologies that are emerging now? Core system vendors like us and some other core system vendors, we're creating contributory database of the data of the systems in the cloud that we're supporting for our customers. It's anonymized, but what that does is it gives people access to data. Maybe they don't have that many policies for a certain line of business. So doing an AI model against their own internal data is not going to be as effective if we had access to a broader set of data, that we could create that model that they could have access to it. Or as you kind of look at it from the standpoint of, the next generation kind of data providers, where like what Lisa is focused in on, leveraging data mesh technology and blockchain that really distributes data ownership and creates domain-oriented data. How we're able to kind of have access to all of that is really, really important. So a strategy today isn't about, oh, let's identify all of our data, let's create a data warehouse or a data lake house. It has to be, who are the partners that we're going to have, both from a third-party data perspective, or from a core data perspective, or from an AI model perspective. How do they fit into that ecosystem so that we have a much bigger view and much bigger access to data that's going to be important for us, not just today, but in the future? Today's strategy is totally different than 10 years ago, Sabine. And it's going to be really interesting to see what is emerging over the next couple of years, because I really do believe that we're on the verge that data is expensive with those third-party data, and we've got to find a way to demonetize it and democratize it, because this industry is dependent upon data, but we can't keep having the price of that data be more than what it is to operate your systems inside. That's crazy.
It is crazy. I mean, you mentioned, right, this insurer in the United States bringing the cloud back in-house. We have a lot of data in-house which we can't use. We are dependent on external data source providers to actually enrich our data so that we can serve the customer or price better or differentiate better, right? So now I would like to go into the negative part of some of the stuff we talk about, because as you know, at the end of last year, we heard a lot about algorithmic denial. So I'm going to go into AI and the negative part of AI, and also the regulation, right? We are seeing a lot of demands from the regulators for compliance, governance of artificial intelligence, and usage, ethical usage of AI data to ensure that we apply ethical standards. So what strategy can insurer employ to innovate responsibly?
So I think here in the US, there's been some work done on that. And the good thing is that with the regulators through the NEIC here in the US, which works with all 50 of the states, from a regulatory standpoint, they've been out at the forefront of this, trying to figure this stuff out, which is a good thing. But they're doing it in conjunction with insurers, and they're doing it in conjunction with solution providers who are actively engaged in it. And so it's a joint effort. I think that what we're seeing is that everybody sees the potential of AI and they want to be able to leverage that potential. And the state regulators definitely do, because they see it helping to make insurance more cost effective, helping to make sure that it reaches more people. I think it has to be a collaborative effort. And I think that for us to do it ethically and to do it innovatively, we've got to be very open in that collaboration, not just between solution providers and insurers, but with the regulators. Being open with what the models are doing and making sure that they're accessible, that they're not going crazy, and they're not doing some weird types of things. We know that that's happened in the past, and we see those potential lawsuits out there. And so we've got to be responsible. And that means solution providers, that means insurers who are doing it themselves, and that means working openly and transparently with regulators to be able to kind of highlight that stuff, and then being able to adapt and adjust as we need to, as things change, because things change. Keeping the same model the same all the time isn't good either, because data changes, demographics change, risk changes. So we're always having to recognize that we have to be able to change as things change around us too.
100%. And as you are mentioning, the fact that we need to collaborate with regulators to ensure that we have compliance, bias-free, discriminatory-free. I would like also to highlight some of the key regulation coming to market here in Europe. We had GDPR, which was all around data. Then we have had, the AI Act, EU AI Act, which has been also bits of it has been taken across the globe. This is going probably to be reinforced so that we have some more standardization around how we keep people safe as they're using or being, bots are responding to them. The last one, which is going to come in Europe, effective on the 17th of January 2025, just, I guess, a few days from now. Denise, is a Digital Operational Resilience Act called DORA, which is all about making sure European companies are actually enhancing their cybersecurity and operational resilience within, it's for financial entities actually to protect the customer, because we have seen also a lot of data breaches and cybersecurity breaches. So do you see similar things happening as well in the United States?
Yeah, those things are happening. And I think that's where the state regulators, the NEIC from an overall insurance regulation standpoint, and the federal government gets into place. But, one of the things I remember talking to somebody recently at one of the industry events, and they said, you know what? We all have to just get used to it, that probably our data's been hacked multiple times from different places. I mean, last year I don't know how many letters I got, from the hospital that we use, from the caretakers we use, from the telephone company I use, all of that. Everybody was getting hacked, and I got a free access to kind of monitor my credit, so to speak. At some point, we just got to recognize that some of our data has already been hacked and it's out there. And so what do we have to do? We just have to be resilient to be able to kind of monitor what it is. We've got to be responsible at monitoring our own information and making sure that it's right. And then I think on the insurer side, similarly, they've got to be able to tell people what are they doing to try to protect the data? And if something does happen, what are they going to do? So I think it's not just about protecting the data. It's when it happens, what are you going to do as well? Because like it or not, it's probably going to happen. I mean, shoot, Sabine, the U.S. government was hacked just in the last week. So yeah. So
Incredible, incredible. Partly when you know there is so much resource available for governments to protect themselves, but no one is safe in some ways. And we know that our data is out there, even though we didn't think 10 years ago, maybe not to be on Facebook, right? So now we have to readjust our cybersecurity practices within business, but also within our personal life. Now I would like to move into something maybe a little bit more positive, right? We are moving to digital first businesses to serve a digital first customer. And for this, we can't do it alone. We have to use collaboration. We have to work with others. Insurers need to work with tech companies. Tech companies need to work with insurers, with non-traditional players, with adjacencies. For me, I love looking at, you know, insurers sell to other industries. I love looking at the other industries, actually, Denise. So, what opportunities lie in this broader ecosystem, and how can insurers embrace those effectively?
So I think that there's a lot to learn from other industries. And I think that, you look at, I always like to track kind of when my kids were younger and even today, where did they like to, what things did they like to kind of engage with? Where did they kind of do? And I think if you kind of track this younger generation, where did they really engage? And they hop. What becomes important, Facebook once was hot. It's no longer hot. YouTube's hot. Instagram is hot. They kind of flip all over. And I think we've got to understand that nothing stays the same. And so how do you kind of digitally engage them? So you may start out one place, but you've got to have the ability to kind of shift when your customer demographic shift. It was about making payments. How do I do payments? You could do it electronically, through your online banking. You can make your digital payments. That was a big deal. That was just a few years ago when COVID hit. Now it's about Venmo. Now it's about other payment types of options. So where are you kind of focused in on that? You've got to give people options. I think that's the key, is that no one customer is the same. And they aren't going to necessarily use the same type of payment option for all the different things. So I'll just take my daughter as an example. She uses Venmo. She pays her dog grooming via Venmo all the time, because through Venmo, she's also selling her books. She's an avid book reader. So she sells her books and she gets her money into her little Venmo account, and then she pays for that. But she pays some of her bills online banking, the traditional way. And then she does her digital Starbucks app, that she's got that. So she's got all these different options. And I think that's where we've got to kind of say, what options do you have available as an insurance company to really digitally engage with your customer? I do know one thing. People are tired of having all their apps on their phone. They've got too many apps on the phone, and it's just like, I can't have 5 different insurance apps on my phone. So how do you kind of look at things slightly differently? And I think that's where embedded insurance comes into play, quite frankly, Sabine, is because people have a trusted, loyal relationship with Starbucks, as an example. Could they offer insurance that they could also go through there? I think that's where Apple's kind of looking at things. I think that's where some of these big technology companies that have these trusted relationships, they can extend their value and their trust and their loyalty to their customers by offering other types of products and services like insurance to those on an embedded basis. That's why embedded is kind of interesting to people, because it makes it easy. It makes it easy to kind of manage your life, and having an app for your banking here and an app for this and an app for that, it just gets too confusing. So someday somebody's got to come up with an idea that's going to say, how do I look at it from a customer perspective? How can I manage all of my financial well-being in a centralized app?
I
How
love
can I
that.
manage my investments? How can I manage my banking? How can I manage my insurance? And I can look at my overall financial well-being in a holistic way. Somebody's going to come up with an idea on that, because I think that's what's really needed more than ever, Sabine.
Yeah, I hear orchestration, and we are all seeking some ways a little bit better orchestration, get rid of things we don't need, and actually be able to see very clearly what we need every day to actually build our personal financial freedom, but also to actually be alerted when things is not going the way we want to. One things I do every year around, last week is go through all my Apple subscriptions and start literally canceling the things I tried, often for business. You try a GenAI app here, and often, they come through your Apple subscription app. And then I go through everything and actually get rid of things I've tried and actually which do not work for me. Which takes me to brand reinvention, actually, Dennis, because you are a brand expert, right? You're a customer journey experience expert. And in a marketplace where, loyalty is fleeting, you said, that's talking about your daughter, a lot of apps and using the apps which are much more relevant for me right now. And not everything is in one app. I may be doing Starbucks with this, and I'm going to use PayPal or other payment platform for that, and then use my traditional bank for other type of payments. So you are, democratizing the way you do things. How can insurers transform their brand to connect better with younger generation, but all generation actually? We are also part of the generational transformation, I think,
Absolutely.
too, right?
Yeah, I think today for insurance companies, I think their brand, we're at a point where brand is really at risk, to be honest, Sabine, I think in many ways. I think the last few years where we have seen um, the rise in costs of insurance and the difficulty at times to get insurance because you're canceled. For whatever reason, you got canceled because you live in a certain area and they don't want to cover you anymore. And then you've got to go and start looking for new insurance. Or only this policy was canceled, but this policy was kept. We've made it much more difficult. And I kind of correlate it back to the early 2000s. Remember when the hurricanes hit um, um, New Orleans and Texas back in 2005, 2006, and it was just devastating. And it was a brand wake up moment for insurance at that time because a lot of claims were being denied. And it was ethically, I don't think a great place to be, but brand wise, it was horrible because the industry just got pummeled. That we pay all of this money in for insurance and then they don't pay it out. They were finding reasons to kind of not pay insurance. Some of them backtracked on that and ended up starting to pay. And I think that's happened in a couple other instances. I think today's different in that it's not about not paying out the claim, it's about the affordability of insurance. And so we are running a real risk from a brand standpoint. Yes, you can provide coverage, but at what cost is it? And at what difficulty is it to try to get underwritten? Or I can only have this covered here, and then I've got to go look for insurance someplace else. So, like for me, I've been with the same insurance company for over 40 years for my property and my auto. And we got two properties now, we got two autos, I've got my umbrella insurance and everything. And I've been a loyal customer for a long period of time. And I'm grandfathered in with a really nice lower kind of deductible, particularly from my property. My car insurance went way up. And I sat back and I really sat back and I thought, am I going to stick here with them or am I going to switch? And I did some research. I ended up sticking with them, but I'm not sure I'm going to long term. I just didn't have enough time to kind of do all the research I wanted to do. And part of the reason I ended up staying with it is that I may get a lesser premium, but then I was worried that they wouldn't necessarily pay out the claim. Or if I had a claim, then my insurance was going to skyrocket. So there's all these different factors. And so I think for insurance, there's kind of a multiple set of things. We're facing a brand challenge today as an industry, and that extends out to every insurance company because people are really, they're not happy with insurance companies because of the cost of insurance and it keeps going up. Number two is that we're not offering them how to reduce their risk. So we've got to rethink what it is, what's our role here? We're not just covering with insurance, we've got to help educate people. We have to help give them ideas as to how they can manage their risk, reduce their risk, minimize their risk, put some responsibility on them. They're willing to take it. I am fully believe that customers are willing to take that if they can have a lower premium and make sure that it isn't always about the premium. They just don't want their property to get damaged, So, because that's a hassle in and of itself. And so I think if we rethink that, we rethink what it is that we need to do for risk resilience. We need to think about how often we are communicating and engaging with customers, Sabine. The only time we engage with them is when we send them a bill or when they call in for a claim. We got to find better ways to engage with customers that they see value. They got to see a real value to the brand over a longer period of time, not just when they have a claim and they're paying the bill. And so rethinking that goes back to the business model again, Sabine. We got to rethink what the heck it is that we're doing.
We have to rethink what the heck we are doing. And you shared your example. So we are, my husband and I, with one of the leading UK insurers, and we have been with them for probably 20 years. And I would say a year ago, a lady lost control of her car and went straight into my husband's car while she was driving. And what happened here is that when he called to actually report the claim, the insurer treated my husband as a fugitive. And he was fuming. And I said, how can you be with an insurer, no claim for 20 years? And when you have then single claim and it was not at fault, he's badly treated. He was absolutely furious. And at the same time, you can't do anything about it. You are actually, wondering like you whether you should stay with that insurer. So I would like to talk to you now a little bit about talent leadership and the future, because I think as part of the trends, we need to go and set some notes around where the market is going. And I would like to go into Workforce 2025, because as you saw, the whole of LinkedIn is covered with agentic AI, right? Automation and AI evolution. What skill set do you think and what culture do we need to set within our teams to be relevant and to do the work we need to do in the right way as we start building the future leaders of tomorrow? And what leadership mindset do we need to set internally to be successful?
Yeah. I think I've written that it's estimated that somewhere between 40 and 50% of the insurance workforce will be retiring by 2030. And one of our recent customers just highlighted that when they did an assessment, within the next 2 to 3 years, 90% of their IT workforce could retire. That's a pretty scary thought. Because it's not just about the technical skills that people have, it's about all the institutional knowledge that they have and the knowledge about insurance itself. I mean, for both of us, when we first got into this career, you kind of fall into insurance. And for me, I've always heard this, that once you're in insurance, you never leave. Well, that was definitely me. It's not something that you can learn day one. It takes experience and it takes time. I think what we need are individuals that have I like to say a left brain and a right brain. We need analytical people. We need people who can understand technology and are analytical in nature to some degree. But we also need people who are creative, that they're empathetic, that they are, that they have this kind of different kind of perspective. I think a balance of those two is really, really crucially needed. It can't be one or the other. It has to be both. And I think too often we've kind of gone to, oh, let's just get the best technical people. Sometimes that's great, but then they can't communicate and they can't collaborate with others. The same thing that we get, people who are coming out of college with general, education. They might be creative, they might be all those things, but then they haven't really leveraged technology. They don't necessarily know how to use technology, and every worker is going to have to use technology in some form or fashion. I think the other aspect is that analytical skills is so important when you're rethinking the business and when you're saying, could I do something different? Could I do something better? Could I be creative? One of the things that I've often said, Sabine, is that we need to embrace people who are creative, out of the box thinkers. And quite frankly, that's a risk. And for our insurance industry, sometimes we get a little, oh, I'm not so sure about that type of thing. And I think that's why I kind of moved to different roles in different organizations, because I was a little bit of an out of the box thinker, not a little, a lot, and sometimes a rebel rouser as a result of that. And I think we need to embrace those kinds of people, because until we embrace people with new and big ideas and creativity, not everything's gonna evolve into something positive, but we need that creativity to kind of embrace that inside of the organizations, to kind of say, could I communicate to this customer more empathy, with more empathy when there's an accident? Could I actually offer some suggestions or ideas for them? We've got to have people that are just going to do that on both the business and the IT side. And I think that's where we have a great opportunity, because it opens the door to more people to want to be a part of this industry. And for this younger generation, they want something that's going to be of value. They want to work for an organization that's important, that is going to be socially important, that's of value. And there's not an industry I can think of, other than the insurance industry, that foundationally is important to every business, every individual around the country. And we've got to get back to those roots as to why we exist. And we exist for the betterment of people, and to be able to protect people and to offer them the support that they need in their time of need, and to make them whole again. And I think that if we can communicate that to the younger generation, I think they would embrace it wholeheartedly.
I agree with you. I think what I see is, when you start looking at skills, you said, the technical skills of analytics, but you have to balance the analytics with using the latest technology. And I think all of us, we need to learn how to use AI. I think, technology has moved to the business side. It's not just a technology
Exactly.
capability. Every business people can use a technology today, and that is the democratization of technology. And then we can all embrace it, because actually it's not that expensive to use. I want to highlight as well. So when you look at those skills, you mentioned creativity, problem solving, decision making. This needs to be super fast as well. So it's taking the technology to enable us to augment our work, to actually do things better, faster, and more creatively. But also, I think you highlighted another point, which is around leadership. It's about embracing
Yeah.
the change and being part of it.
Yeah, and I think don't be afraid of it, that the adjective, because it's not going to do away with the work. We are still going to need people that are going to be doing the work, but we need people who are thinking, are leveraging the technology, because they're using their minds, they're helping to really solve problems. What the technology is going to do is it's going to take away the menial stuff that none of us like to do. And it's going to allow us to really use our brains and really be able to help people and engage with our customers in a different way, so that we're not inhibited by all of the back office kind of manual work that we still have, or the menial work that really doesn't add value to what we can do for the customers. I think it's an exciting time, quite frankly, to be able to move into this industry.
Yeah, we become strategists, advisors, work on much more complex tasks. So, final question, Dennis, looking ahead to 2025, what do you envision is the single biggest opportunity for insurers, but insurance technology providers as well, right? Who are willing to challenge the status quo and invest in the next generation of solutions to transform our industry.
I think that and it's I think the biggest thing is going to be around the data and analytics. It is the number one thing that is going to, and that includes everything from just the AI machine learning models to the Gen AI to just the business reporting, everything across it. I think that we have to invest in that, and it has the fundamental biggest opportunity to change how we underwrite risk, how we assess risk, how we address customer needs, how we optimize the business. The potential hasn't even been even tapped into yet. I think it's the biggest opportunity. I think we're going to see some customers and industry individuals that are really going to accelerate it. I think when I think about, we own Berkshire Hathaway stock, and so we always go to the annual shareholder meeting. I remember a few years ago, somebody in the audience asked Warren Buffett, what did they think about Progressive, that they were able to really underwrite based on leveraging usage-based insurance and the IoT and all of that type of stuff. And he admitted at that time that they were probably 10 years behind, and it made a big difference. That's where investment in technology really made a difference in what they were doing with technology and with data in particular. But now others are catching up to that. That's just an example of what you could possibly do with it, but that's only the tip of the iceberg. I think there is so much that we can do. That was really focused in on underwriting. I think we can really change operationally how we're doing business so that we can really focus in on the customer and make the experiences just amazing and fantastic.
Denise, thank you so much for joining me on Scouting for Growth. Where can people find you if they want to reach out to ask you for your trends, for your help, for anything? Where do they go?
They can find me on LinkedIn. I'm on LinkedIn. They can find me on Majesco's website. You can link to me off of the website, majesco.com. And you can also find me on Twitter as well. So I'm pretty accessible. So open to having a conversation at any point in time. And I look forward to seeing you in person again this year, Sabine, at one of the industry conferences. And we'll have to get a bunch of us women together again and have a nice coffee and drink.
Absolutely. And I can't wait, Denise. Thank you so much for joining me and sharing your wisdom. Very, very grateful. Thank you.
Thank you. And thank you for a wonderful partnership and a wonderful friendship. I really value it, Sabine.
Same here. Until next, Happy New Year, and I'll speak with you very soon.
Okay, sounds great.
Bye.
Bye.
I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.